How's it, everybody? I hope you all are having a great day. So what I'm going to go over today is these four T accounts: bank, debtors control, trading stock, and creditors control. The first three are assets. The last one is a liability. Okay, and so the first three are going to increase on the debit side and decrease on the credit side, whereas the creditors control will be the opposite. It will increase on the credit side and decrease on the debit side. Okay. Yeah, I don't know if you guys know this, but you can use DAX-LEC. Yeah, I'm not sure if they've taught you this, but I might as well just pop it in here just in case. So the C is for capital. I spelled that wrong. Excuse that. Sorry, folks. Yeah. And then this is income, your liabilities, and then this is going to be your drawings, your assets, and your expenses. Okay, so starting with the easiest one, which is bank. Okay, so the way bank works is it only works with cash transactions, basically. So when someone buys something on credit, for example, that doesn't affect our bank, right? Because that would affect our debtors control. So at the end of every single month, what a business will do is it will total its cash receipts journal and it will total its cash payments journal. And then they will take that figure and they'll put that into bank. Okay, so your bank will pretty much always have an opening balance unless this is literally the first month that you're running the business. And so assuming, that's not the case, we are in November, for example, November 20.4, and then the day would be the beginning of the month, and then you would have a balance brought down because this is the balance sheet section. So you have the balance sheet section and you have the nominal section. All four of these accounts are in the balance sheet section. And when you see the word balance, you know that you're going to have to balance the accounts at the end of the month. I'll show you how to do that now. But whereas the nominal, you just total it. So for example, sales, you will have your T account and that's all good and well. But you'll have a balance brought forward, for example, and then you'll have an amount, let's say 9,000, and then during the month, let's say you have 1,000 that's contributed to, let's say, bank. Then from there, and this is B1, then from there what you'll do is you'll just total it to be 10,000. Cool. You'll total it, and then from there, you'll just start your next month with 10,000 and say balance brought forward. You don't actually balance it. Okay. But with these, you are going to have to balance them. Okay, so let's say your starting bank balance is 32,000 Rand. Okay. Then during the month, you, let's say, buy trading stock. You receive money from debtors. You pay off creditors. And so at the end of the month, your cash payments journal has a total bank amount of, let's say, 24,000 Rand. Okay. And so your total payments, total cash payments, specifically cash, is going to be 24,000, right? And this is going to be your CPJ. This B1 and then B2, I'm talking about this stuff here, is basically your folio. So that's your folio. I don't know if they've taught you that if they've not taught you that, we learned that in grade 9, and it was like they were very serious about it. So I don't know if that's the same with you guys, but it's basically just how you reference different accounts in your general ledger. Okay, and so I'll show you that like in a minute. But for now, CPJ and CRJ is what you're going to put under folio for your total cash payments and your total cash receipts. So November has 30 days, sorry, and then November 20.4. Then over here, you're going to have 30, and then you'll have your total receipts. Total cash receipts, right? Remember the cash. And that's going to be from your CRJ. So now let's say the total in your bank, the total of your bank in your CRJ is, I don't know, 40,000 Rand. Then that's all you're going to have here, pretty much. If you've, again, I can't remember back to grade 9, but if they give you transactions that would, adjusting transactions, where you need to adjust the amounts, for bank, for example, let's say they didn't record a cash sale, then your CRJ wouldn't have that cash sale, and so this 40,000 would therefore be wrong. So if they said, let's say there's a cash sale of 1,000 Rand, where we sold goods for 1,000 Rand, the customer like paid in cash, then you would increase this by 1,000, and your contra account, you would just put it as the 30th, unless they specifically give you a date, because this is when you're making the adjustment, and your sort of contra account would be sales, which is like what we had down here, and then here you would link this to N1, assuming that sales is N1 in the nominal section. Okay, cool. Now balancing. So the way you balance is, for assets, you're going to balance on the left, the debit side. For liabilities, it will be on the right. But as a general rule of thumb, just look where the amounts are the largest, and then that's where you'll balance. So it will pop your total lines here. Cool, and now you'll total this, and you will get 73,000. And then you move that across to here, right? You move it across to have 73,000. So now the difference between the 24 and the 73 is what's going to be your balance carried down into the next month. So on the 30th, you'll have a balance. Oh, excuse, there we go. Balance that is carried down, and that will be, in this case, 73,000 minus 24,000 is going to be 49,000. Cool. And this 49,000 will be your balance brought down for the 1st of December. Cool. So that's your bank. I will show you a scenario where you have a credit balance for bank, an opening credit balance for bank, but nothing really changes. It doesn't really change much, but I'll show you that. Okay, for now, let's move on to debtors control. So in debtors control, also you'll have a balance brought down. So November 20.4, and the day is 1, balance brought down. And let's say you have balance brought down of 8,000 Rand, just to keep this like numbers simple, because it doesn't really matter what the numbers are. The principle stays the same. You'll always have a balance brought down, and then it will be increased by sales. It will be decreased by people paying you back. Okay, so the credit sales, for example, sales from the DJ, okay, will increase the amount of debtors control you have. yeah, because more people will owe you money. So at the end of the month, you're going to total your debtors journal as well, and you're going to get a figure of, let's say, 13,000 Rand. Why am I picking silly numbers? Let me just be normal. Okay, 10,000 Rand. Simple figures. Okay, like the numbers don't actually need to be there. It's the accounts that matter. Okay, so then on this side, you now need to think, okay, well, what will decrease your debtors control? Okay, so what will decrease debtors control is things like when we give debtors allowance, when we give debtors discounts, settlement discounts. So that would be our debtors allowance. Okay, for example, from the DAJ, we might have totaled our debtors control column to be 1,000. Okay, and then what else could have decreased debtors control is when debtors pay us back. So in our cash receipts journal, we would have received money. Yeah, like we would have received money from people paying us back, and bank would be our contra account to that. Let's say, I don't know, 4,000 people settled their accounts. Cool. So that will be that. That's all that you'll have to really worry about, unless I'm completely forgetting about something. But your DJ will increase your debtors control, your DHA will decrease it, and your CRJ will decrease it. Your DHA, you'll give people, the debit and credit notes, or you'll give them a credit note. Yeah? No? Okay, wait, let me just Google that, just so you guys know. Do debtors receive the debit or credit note? Okay. Okay, a debit note, also known as a debit memo, is a document that informs a buyer that their debt and the amount they owe. Debit notes are are used in business transactions, such as business supplies goods or services before sending an invoice. Okay, no. Okay, so the buyer, so our debtors, will receive credit notes, and we will keep the debit note. Yeah, because like basically just for like transactional purposes, you know how you would keep like a receipt, for example, for when you bought stock, you're going to keep the debit note just so that you have the papers to prove what happened in the month. Yeah, so that your accountant isn't just like reducing the amount debtors owe you for no reason. Yeah, they can actually like show you where we issued them a decrease in the amount that they owe us. Okay, so from here, you now need to balance again. So I'm going to balance here. Cool. Yeah, don't overthink this, hey guys. Like, if they'll probably give you an extract from a DJ, an extract from a CPJ, an extract from a CRJ, all that stuff. And then your job is literally just to copy and paste numbers. Don't overthink it. Like, just memorize that on the left, you're going to have balance brought down and then sales from the DJ. Then on the right, you're going to have debtors allowance journal and you're going to have bank, like from the CRJ. Okay, so yeah, don't like overthink it. On this side, you're going to have 18,000. You're going to bring that over to have 18,000. And then the difference between the 18,000, the 4,000, and 1,000 is going to be 13,000. And that's going to be your carry down, balance carried down. and that will be your opening balance. Oh my word. Sorry for the spelling, guys. Yeah. It's like early, and I stayed up till like 2 studying, so it's a bit rough. It's a bit rough out here in these streets. Okay, so balance brought down is going to be 13,000. Cool. Then trading stock. So trading stock, I'm telling you now, they love asking trading stock. What are the chances that they're going to ask you trading stock? Like 100% of the time. Yeah, they're tired of asking bank. They were going to ask you bank in like grade 8. Maybe debtors control, hey? Maybe. But I don't see it as being likely. Creditors control? Maybe. Debtors control and creditors control are basically like the same thing. You'll see, like it's basically, they're not testing very much. So that's why I don't know if they'll really ask that. But trading stock, I'm telling you now, I'm warning you. They will ask this 10 times over. Okay, so at the beginning of the month, you will have, so focus up, lock in. Okay, so trading stock, at the beginning of the month, you'll have a balance brought down. November 20.4. I hope you guys don't mind. I'm going to stop writing all these dates and stuff. Like, it's not that deep. Like, it's deep. Like, you must write them because they pressure you about that. But, I mean, it's not that deep for me. I don't need to, like, you guys know you have to write the date. Okay, so the balance brought down for trading stock, let's say, hypothetically, it is 5,000 Rand. Okay, this is like a, you know, it's a very small business. Like they're not operating these days. They need to like get some financial advice. Anyways, these people in the month they buy stock, but they're a business who buys stock from many different suppliers. Some on credit, some with cash, and so that's why they love to ask trading stock, because trading stock. Let's say you buy some trading stock from your supplier, and you pay with cash. In that case, you will have to record a cash transaction, which will be bank. So you go in your CPJ, you go to trading stock, the trading stock column, you see what it is at the bottom, and that will be how much trading stock you bought with cash. So now let's say that during the month was 4,000 Rand. Okay, then you go to your CJ, your creditors journal, you check trading stock, the trading stock column. Let's say they bought 3,000 Rand on credit this month. So that would be, it'll be 4. Creditors control. I'm not writing dates. Okay, then on this side, you now need to think about what will decrease our trading stock. Well, sales, when we sell something. So cost of sales is the actual amount of inventory we give up when we make a sale. So cost of sales, let's say that's N2 because it's in the nominal section. Your income and expenses are in the nominal section. Okay. So in this case, let's say we sold a total of 6,000 Rand of stock. Okay, now it's bugging me. I'm actually going to write the dates. Yeah, write your dates, people. Yeah. Okay, then from there, you now need to think, okay, how else can my trading stock decrease? Okay, so again, I'm not sure if they've taught you this, but I'd rather put it in here, and then if you're doing accounting next year, you know, rather than no one knows, you know. So let's say in your business, they ended up being a flood, okay? So some of the goods that were, let's say, in the storage room, that were in boxes even, they were sitting on the floor because they were in boxes, like, who cares, right? But little did they know there was going to be a flood. So now when this flood happens, let's say that box was holding some electronic goods that you sell, for example. And now those goods get damaged. You can now no longer sell those goods unless you're going to now repair them and do all that and put them in rice, you know, do all that. Okay, this business is small, so they actually might do that. But, okay, assuming it's a normal business, they're just going to write it off as a loss. So, you will have damages, okay? And damages is an expense, okay? Because you completely just write off the stock, okay? You can't use any of the damaged stock. So that will be an expense, let's say in 3. It won't be N3, I'm telling you, it will be like way down in your nominal section because it's not a very common thing. Like, whereas cost of sales and sales, that happens every single month, you know? So that's like N1, N2, standard procedure. Okay, so now let's say damages happen. Where you'll get damages is in a transaction. That will tell you during the month, 2,000 rands worth of stock was damaged in a flood. Okay, so damages is just like the default name, but some teachers might say damages to trading stock caused by flood, or damages by flood, or I don't know. They'll come up with 101 different names, but the procedure is still the same. Just call it damages, move on. Okay, and let's say 2,000 rands worth of stock got damaged. Okay, I hope I've not lost anyone by now. Okay, then this cost of sales was probably cash sales, but where else do we sell stuff? To our debtors, right? So in our debtors control, we'll probably have a cost of sales as well. And this cost of sales could be, let's say, maybe only like, okay, wait, let's make it realistic. Here, debtors control, we had 10,000 rands worth of sales. So, okay, let's say like 5,000 rand. Is it going to balance? No, it's not. Yeah, there's no way it's going to balance. Okay, so let's say here from our creditors, we actually bought 7,000 rands worth of stock. There we go. Cool. And our cost of sales is our N2. Okay, so this is cash from your CRJ. This is credit from your DJ. Cool, calm. This figure is from your CJ, and this is CPJ. Cool. Are we all happy? Good. Okay, now from here, with trading stock, what also might happen is if you return stock to your supplier. If you return stock to your supplier, number one, if it's bought on credit, you will no longer have to pay that credit. They will issue you a credit note because you are their debtor, okay? And so that will decrease your creditors control, right? Your creditors control will go down, but we're not worried about creditors control for now. What we are worried about is trading stock. The other thing that happens when you return goods is you no longer have the goods. So you need to decrease the amounts of trading stock you say you have on your books to match how much stock you have in real life. Like if you had to do a stock count, how much stock do you actually have? Okay? And so over here, you'll have returns. And so if it's creditors control, you'll have creditors allowance. No, sorry. It won't be creditors allowance. So when you decrease, basically when you record that return, what decreases is your creditors control, and then what what decreases is your creditors control, and what decreases is your trading stock. So your contra account to this return in the trading stock account is your creditors control, and that's B4. Okay. So let's say we made a return of a casual 2,000 rand. Okay. Because for some reason those goods were damaged and not good. And we're going to change these figures again. Nice. Awesome. Okay, so now you need to balance. And now I've sort of run out of space here, but you need to balance. Okay, so let's balance. Not there. We're going to balance here. Okay, so the 5, 6, and 7 is going to give you 13 plus 5 is 18,000. And then on this side, you're going to have 18,000. So 18,000 less 2,000 less 5,000 less 2,000 less 16,000 is going to be 3,000. Okay? And so this is going to be your carried down amount into the next month. So your balance carried down is going to be that. And then you'll have an opening balance for December brought forward. Brought down of 3,000. Yo, how long is this video? Hey, guys, are you even gonna watch it this long? Why does it not look like it's recording? Okay, I'm just gonna hope for the best. Okay, so yeah, then that is your trading stock. Do you see there's lots of stuff going on? There's a lot going on. That's why they'll ask it, because there's a lot to test. They can test your understanding of many different things. Do you understand that, hey, when we return goods, that will decrease our creditors' control? If it's goods that we are returning to a supplier that we transact with using cash, therefore the initial transaction was a bank transaction over here, then on this side you'll have bank. So it will decrease trading stock, but it will increase bank. And the reason it will increase bank is because they'll give you your money back. Don't overthink it. It's not deep. Okay. Then creditors control. Last and final one. Last and final boss. But it's you'll see it's not deep. Okay, so but here the only difference to debtors control is that you'll have a balance brought down on this side. Let's see, November 2004. I actually just realized I was saying November, yeah. This will be December. Okay, December. Cool. Here, let's say you have an opening balance of 4,000. Then, during the month, okay, let's assume you only buy trading stock on credit. So this amount here will also go to here, 7,000, and that will go under trading stock. Okay, and that is your B3. At the end of the month, you'll total that. Then what will decrease it is creditors allowance. Your creditors allowance journal. Whoa, why am I writing creditors allowance? It's trading stock. Okay, again, guys, I could be wrong on this, okay? But I'm like 100% sure, so I'm not. Okay, so it is trading stock, and that is your B3. Because there's no creditors allowance. What's it called? There's no creditors allowance to account. That's why it's different to debtors allowance. Is because debtors allowance. What am I saying? Okay. The reason creditors control is more likely to be tested over debtors control is because debtors control is pretty straightforward. Okay? Whereas creditors control isn't as straightforward. And the reason it's not as straightforward is because you don't have a creditor's allowance, and because it's different in the sense that it's a liability and people forget that and start balancing on the debit side, thinking that it's an asset. Okay, so for your trading stock, again, assuming that we only buy trading stock from these people, if we let's say bought consumable stores from these people, for example, like cleaning supplies, then that would be here as well. Consumable stores, what. Okay, but in this case we don't. But if we did, it would be consumable stores, and then if we make a return, the consumable stores will be here as well. Cool. So here we are going to have the 2,000 Rand. This 2,000 Rand here. This one. Cool. It's the contra account. So when your teacher was saying there's a double entry, you guys know that, but at the same time, practice it. Like, it's there for a reason. Okay, the other way we decrease creditors control on the debit side is by actually paying off our creditors. So if we pay our creditors, that will decrease, how much we owe them. So you'll go to your CPJ, and you'll go to your creditors control column. And again, I'm writing creditors control. And bank will decrease it. So you'll have your debit bank, and then up here, your credit bank, if it was like an individual transaction, because you're decreasing your bank to decrease your creditors control, the amount you owe people. So B1, let's say, I don't know, a calm 4,000 you paid back. You paid back the total amount that you owed in the beginning of the month. Of course, that's not actually how it works, because, let's say you're paying them back on the 20th for a transaction that happened on, let's say, the 15th, But assuming that these people just paid off their previous balance, it would be 4,000 Rand. Okay, so now you balance. On this side, you're going to have 11,000. On this side, you copy it over, just copy paste, don't overthink it, just copy paste. Then on this side, this will balance to a carried down amount of 5,000, and then you open for the next month, December of 5,000. There we go. Cool. That's that. If you guys have any questions, also just chuck them in the comments. I'm telling you now, they're gonna ask trading stock. Like, unless they want to give you free marks, then they'll ask you creditors control or debtors control. But else they're asking you the trading stock. Okay. Sia also asked me to cover a trial balance. A trial balance is really not that deep. Don't overthink it. It's just a balance of... Okay, well, the line should not be there. It's just a balance of all your accounts. Again, that's also like a silly place to put it. Okay, let's assume it's there. There. Okay, so your trial balance for XYZ traders as at, let's say, 30 November 20.4. Okay, I didn't write it very well, but I mean, it's there. So your trial balance will have your balance sheet section. Okay, and then down here it will have your nominal section. Okay, and then literally all you do is what the business will do, and what you would have to do is go to your trial balance, go to the very top of your balance sheet, see, okay, it's bank B1, then you go bank B1, and then this is going to be, if it has a debits balance in rands, credit balance also in rands, this is your folio, and as at 30 November, what is your balance? 49,000 Rand. And you copy and paste that. Bam. Then you go to your next one, debtors control. Control B2. You see what the balance is? 18,000. Then you look at your B3, your B4, B3, B4, B5, etc., 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 and you just copy and paste the balances. So for trading stock, it will be debtors control 13,000, trading stock is 3,000, and creditors control is 5,000. Okay, so this is 5,000. This is 3,000. This here is 13,000. And this is your trading stock. This is your creditors control. Let's say this is equipment, etc. What as B5, and let's say you have 40,000 rand in equipment. Cool. And then for your nominal section, let's say you have creditors. You'll have sales. You'll have cost of sales. You'll have damages. You'll have salaries and wages. You'll have rent income. You'll have rent expense, and the list just goes on and on and on. Okay, and these will be your N1, N2, N3, N4, N5, N6, N11, what. Okay, cool. And these will all have balances. So your sales. Oh, I hope you guys weren't shouting at me for this. Sales on this side. Yeah. Sorry about that, Ix. I was writing it on the wrong side. That's why I was also like, and I was writing these sales here. And I was like, how are my sales on the same side? Even here, I was like, how is my sales both on the debit side? That's how you know you did something wrong. Done something wrong. Cool. If you are given a trial balance, let's say, yeah, let's just copy and paste, you know. But instead of as at 30 November, it is as at 1 November. Or they would actually just write 31 October. Okay? And so what would actually be there then, and these figures I can't scratch them out because then it will scratch out up here. But that would be these amounts. Okay, so your 32,000, your 8,000, your 5,000, and your 4,000. Okay, so that's for this year. So I forgot the figures already. Deep. 4, 5, 8, 32. Okay, so if they give you a trial balance to get balances from, you're going to take your 32 over here. You're going to copy and paste it in your bank T account if they ask your bank T account. If they don't ask your bank T account, you're not going to need your bank balance here, specifically for a T account, for a bank T account at least. You might need it for a different transaction. Yeah, they might say to you, for example, bank in the beginning of the month is, like, they'll give you this trial balance, and then you can see that your bank in the beginning of the month is 32,000, at least in the beginning of November. Then they might give you your CPJ, they might give you what your debtors control in your CRJ is. They might give you your sales in your CRJ. They'll give you a few different things in your CRJ, but they won't give you the bank total from your CRJ. And then they could give you the closing balance for your bank. And so then you need to work backwards to find out what your total receipts were for the month. And the way you would do that is, easiest way is beginning minus end plus increases minus decreases. And that should end up giving you an amount of 0. Okay? Like it should give you 0, and then you should move whatever you want to solve into like the 0 space, if you think of it as an equation. So you'll have beginning plus increases minus decreases is going to be equal to your end. But because you moved the end over, it's now a negative, hence the negative end. Okay, so your increases in this case would be your total receipts. So you'll have your balance brought down at the beginning of the month, plus your total receipts minus your total payments is equal to your end. And so if they gave you this, and they gave you this, and they gave you this, you just solve for this here. Cool. I said I would also give you a situation where you have they call it an overdraft for your bank. And that's just when you have a negative in your bank account. So if you've overspent, or if you have a credit account, or an overdraft account. So yeah, like let's say you want to buy some stuff using the bank's money instead of your own, then you use your bank overdraft. So in that case, you owe the bank money, right? So it's a liability in the beginning of the month, at least. We don't know what it will be at the end of the month. But all you do is, if you have a balance brought down of 2,000 Rand, let's say you owe them 2,000 Rand, what you're going to do is you think about it very logically, or copy and paste. Like those are your only two options. Okay? So if you have to pay someone, okay, that's going to increase the amount of money you owe the bank, because the bank has now paid that on your behalf, right? So your total payments will increase the amount that you owe the bank. So let's say that is, copying these figures up here, 24,000 Rand. However, if you want to decrease the amount that you owe the bank, you will put money into the account. But maybe you don't put money in your account. Your customers put money in your account when they buy stuff from you. Okay? So your total receipts would decrease the liability. It would increase your bank account, like your physical bank account with Nedbank or Absa or Standard Bank or Investec, whoever. Okay, so that would, for example, in this case, increase by 40,000. And then, again, assuming you didn't record that sale and it's now an adjusting transaction, the sale of 1,000 Rand would also go here, because that would also decrease the amount of money that you owe the bank. Okay, and so now you just balance. But again, balance on the bigger side, but most times it will be this side. So this is 41,000. You take it over to the side, 41,000, and you have a balance carry down of 26 minus the 41 is going to give you what, like 15 maybe, question mark. Yeah, I think that's right. Then you'll have an opening balance for December of 15,000 Rand. Cool. So that's that. If this side ended up being bigger, then you would balance on this side, you would bring it over to your debit side. But it's a very rare situation. They don't like, in the real world, it's pretty common, because people, once they get comfortable with like the idea of buying stuff with the bank's money, like they'll keep doing that. So it is pretty common. Even if they'll have like a small amount of debt at the beginning of the month, let's say 2,000, they'll probably again the next month have like, let's say, a balance of 1,000 Rand debt. Once they like start to use the credit to their sort of advantage, or however way you want to put it. But in terms of tests, they like to ask it this way because changing a liability to an asset, people make mistakes. People will balance on this side, get confused, see that it's not balancing, and they won't know what to do, and then they're stuck and lose marks. Okay, so that's how they would potentially ask that. But again, that was like grade 8 stuff. Maybe in the beginning of this year, they would test that. I think you'll probably get trading stock. Cool. Good luck, everybody.